All right, folks. So I'm going to be doing a turtle soup long. I'm waiting for this candlestick to close, and that'll give me my inversion fair value gap to anchor to. So let's get that set up now. So volume of balance right there. So this is an inversion fair value gap before you all would know about it. So now all I'm looking for is I want to see price go up in the upper half, come back in. Anywhere from consequent encroachment to the high of it, I'll go long. And I'm looking for about $75. This is another example using one micro contract. Just realized I gotta plug my. How not to catch falling knives. We're below liquidity. We've had three. Which on that? Yeah, well, I can show you visually. Okay. No, I don't want to do that. We had sell side here, sell side here, sell side here. All of them been taken. Okay. So now I want to. I'm very strong convicted about this idea. So I'm gonna just simply use the consequent encouragement of that SIBI in accordance with inversion fair value gap expectations. And we can now go back up. We'll look at this fair value gap right there and not require price to trade above this high. So what we're doing is, let me say it this way. What I'm doing is, let me put a $50 stop on it. If you can't afford to lose $50, you can't trade. Okay. I see all these people asking, what's the minimum amount of money? Blah, blah, blah. It's just, it's different for everybody. But again, the range that I'm looking at is what we've created here, that low, up to this high. That range is what I'm visualizing. So inside of this range, I'm going through all of price action. I'm looking for inefficiencies. There's one right here, but I entered there. So that doesn't really give me much room. And if this is the range that we're in here, the highest high, the lowest low, halfway is there. So I believe we're going to move to a premium. So as soon as you get to this equilibrium price point of that range, start going higher from that. So what do we have? We have a fair value gap there. We have that, which is really of no consequence to me because I would require more than that for the trade. This way. Okay. And then going back further, we have this one here. And now notice how this one's real close in proximity to the bottom of that blue box, which is the volume imbalance. So what do you think is more appropriate for a upside draw? This one here between no man's land, and yeah, it's a buy side liquidity pool here, but this with the volume imbalance there, in the bottom of that daily volume imbalance in the blue box, that's a much more favorable draw as a premium array. Now we've already hit the one I just gave you here, but we want to see it stay out of the lower half of this inversion fair value gap. We've already did the minimum criteria, which is trade outside of it. Now we want to see it defend and keep the bodies on a closing basis out of the lower half. We already got one right there. And then continuing, we have this fair value gap with the volume balance at the low of it, right in there. And that's what I'm aiming for, the high end of it there. And not requiring it to get above the high of the entire price leg that we're inside of. So this is the range, is the dealing range. I'm trading inside of that. So that's what I do. I would go long here if it was permitting me to do more contracts. But the rules were you can only trade with one micro. So we'll just say that price high on this candlestick was my entry at 972 and a quarter. That would be my other additional entry. And watch it rip over top of this wick. It's all bear traps. All bear traps. Once we close above this wick, the stop will go right below these candles. No more replay. So in and of itself, what I just told you where I would buy at there, as soon as we take out this high here, that's a simple little ultra short term time frame scalp. That right there, boom, done. 30 handles plus, bang, just like that. 72 and a quarter. Right there. It's the price I told you, which is this candlestick's high. That would have been my fill. And look at the reaction off of that. In and of itself, it's awesome. This guy loves himself. I love who's inside me. All right, so that's the kind of like the mechanics behind what I'm looking at and why I'm expecting what I'm expecting. You can see they did one more time, spend some time below that last low, accumulating those sell side liquidity. Now this one right here we looked at moments ago. Let me take these lines off. This one here, so at this low to that volume imbalance low there. You want to see that act as an inversion fair value gap. There you go. So now we have two areas. This one here, we want to see the bodies stay inside of this one. It can wick down into this one, but the bodies need to stay inside of this one in an optimal condition. As long as we're staying above this, that's okay. Permissible. Inside an order block, these two down closed candles, I would be adding right there. So I'd be adding at 94 even. I'm sorry, 984 even rather. Now it needs to strongly reject, go higher. Really want to see it get above this here because the opening bell volatility is going to run a risk of stopping me out. Come on, look some higher. Right there. The mistake of sitting on these dining room table chairs today. Seconds to opening bell. Big expansion to the upside. In normal volatility conditions, I wouldn't be concerned about getting stopped out, but as of late, it's been a pretty woolly, crazy few minutes in the beginning where they do both sides real fast, and the precision elements are a little fuzzy right now, but it's okay. And pop. Send it up there. Keep sending it. Keep sending it. By George, I think we're going to get the whole run. That liquidity right there, they're going to tag that. I'm going to move the stop there. So trading view, paper trading account, again, is acting like trash. If this was a service I was paying for, I would be looking to unload them. Well, it didn't let me see that limit order above. So it's probably going to fill me at that other one because it's lagging. It's terrible. Well, the very minimum, you get to see. Go. There's the fill. So if it exited me out at the original limit order, it didn't let me adjust, which is fine. So 980.25. 3650. So again, same cookie cutter approach being applied. It's 56 handles, 56 and a quarter handles. $36.60 to make still for the day. And then the assignment's complete. But I'll put this one up. You guys can watch this and then I'll see what I can do on the last. Let's see if I can find $40. It's so hard being ICT, I tell you.